Continuing to generate a lot of interest on Wall Street, NVIDIA is, I should say. Is there too much enthusiasm in just a small area of the market or not? Our next guest says investors should expand their portfolios beyond big tech and speculative assets. He's talking energy, utilities, and financials. Sounds reasonable. Aadil Zaman is partner at Wall Street Alliance Group. But it's kind of fun to be where the innovation is, too. People want to be where the big gains can be made, the transformational wealth-building gains, and not just picking away at these, energy stocks or whatever.
Yeah, they sound boring, right? So I think that really a lot of investors are not diversified because even if you're investing in the S&P 500, you're not diversified. You're more than 40% in tech. So I think we've started seeing this since July 10th, that the NASDAQ has been underperforming the broader markets and severely sectors like utilities, financials, and energy. So I think investors should really focus right now in this environment to broaden their exposure into those sectors.
Sure. If I am an indexer, and as you point out, if I do an S&P 500 fund, I'm 40% in technology. Should I do an equal weighted index as opposed to a cap weighted one?
I think that would be a better approach because if you're just putting all your money in the S&P 500, you're more than 40% in tech. And if the tech sector takes a pullback, you're very susceptible to major drawdowns. So really it makes sense to cautiously to improve the breadth in the portfolio so that when the market does come down, you have protection.
Should I, sticking with that theme, should I eschew an S&P 500 fund entirely and go for something like a Schwab 1000 or a Wilshire 2000 or something that's even broader and has some small caps? A lot of people are very critical of small caps. They don't think they're going to do anything. We keep hearing, the era of small caps is coming. Well, it's been coming for 30 years. It hasn't been here. What do you say to that?
Well, what I would say is that I think that you could, we feel that the era has come for more active management. So you should look at some individual stocks to improve the risk-adjusted returns of your portfolio and look at other areas of the market that are relatively undervalued. So for example, if you look at the banks, right, this sector is going to benefit from lower rates, more investment banking activity.
And deregulation.
Deregulation, steepening yield curve, so lending is going to be more profitable. So if you look at a bank like Goldman Sachs, not only do they benefit from greater investment banking activities, but if you look at the asset and wealth management division, has over $3 trillion in assets, which is only going to grow as the market goes up. So adding some type of exposure there and these type of companies would make sense.